mistakes. And the purpose and mission of what I do these days. So I learned new skills and used different strategies and made new and different mistakes, which once again I gained knowledge and discipline from in order to develop further. Eventually, after a lot of dedication, time, studying, hard work, I didn't repeat these previous mistakes. And the purpose and mission of what I do these days is mentoring and teaching new traders and investors like yourselves to help them become successful. Under my guidance, I can fast track you to being a well rounded trader within a few trading sessions. Over the years, I've done a lot of portfolio management, PAM and MAM account management, and also manage my own funds. So I understand very well the hard work it takes to successfully manage an extensive portfolio. What I have learned is that you need to be adaptable in today's market conditions. The highly unpredictable events going on around the world right now are creating higher levels of volatility, and unprecedented sort of reasons are causing this level of volatility. So you need a plan A, a plan B, and plan C. I've built a great team around me over the past 10 years here in Cyprus, all who have expertise in different sectors of the financial markets. This makes it easy for me to remain well informed, diversified, and to have a balanced portfolio using multiple strategies with one core strategy that gives me an edge over the market. Being on the ground here in Cyprus, the Forex hub of the world, it's considered. It also enables me to build solid relationships with the best brokers in the industry, Forex Cube being one of them. I'm going to put on the chat the link, okay, the registration link for forexcube.com, so you can download a demo account to test their conditions out for yourself, okay? And I will sort of outline their trading conditions and the environment that they provide our clients, and could provide you with as well. So I'm really very excited to be presenting this webinar so I can share my own personal experiences, knowledge, and potential risks and rewards of Forex trading with yourselves. Okay. So we're going to start off with the very sort of basic principles of what Forex is, the very simple, most the stuff you need to know, the basics. Okay, so what is a pip? What is spread? What type of assets you can trade on? Supply and demand, how that works? How leverage and margin trading works? And we'll sort of then go on to the second part of the webinar, where I will go and log into a fresh new demo account which I've just downloaded from forexcube.com, and we're going to show you how to use MT4. Now, MT4 is considered the industry standard platform to trade Forex. It is, I would say, probably 95% of the industry use MetaTrader 4 to trade and buy and sell currencies, okay, and other assets as well. So we're going to place a sort of demonstration trade just to show you how it's done. We'll explain balance and equity, margin, free margin, and margin level, and how they interact with each other. We'll show you some ways of placing trade orders. So if you're looking for a specific price, let's say, on a specific asset, you'll know the many different ways that you can place that buy or sell order. And we'll go into some risk management basics as well, stop losses and take profit orders. Okay, so third part of the webinar will be simple trading strategies. So we're going to go over sort of technical analysis. where we'll go and show you. I'll show you how to use some of the indicators that very technical traders use and how you use them in order to analyze the markets and decide whether to buy or sell a particular asset. We'll discuss support resistance levels. We'll have a quick overview of fundamental analysis as well. There are essentially two types of analyses in Forex and that Forex traders use. There's technical analysis and also fundamental analysis. Technical analysis is more using the charts, and fundamental analysis is more using the news and data points, economic sort of data points and data figures that are coming out every day. Okay, and again, we'll cover risk management, because risk management is probably at the core, the most important thing you need to know and understand and learn about Forex trading in order to be successful. Okay, so we'll discuss risk management again when we're inside the MT4 platform, and then we will discuss the current market conditions, what's happening around the world right now, what's moving the markets right now. We'll go into how the president of the United States, Donald Trump, and how his tweets can have huge effects on the stock markets. It's a very new thing for traders to be able to adapt to. It's extremely new. It's never happened before. So we'll go into that a little bit. We'll discuss the current low interest rate environment that we're all in right now at the banks. You don't have any sort of high interest rates at any of the banks at the moment like we used to. So we'll also be handing out. You can download what we'll our handout. Okay, where you'll be able to get everything that we're going through right now in PDF format. You've got it in writing. We'll discuss the trade war as well, how the tariffs on China exports from the United States are affecting the markets and causing global tension, global slowdown, and we'll also go into how we're coming to the end of what we call the economic cycle. So there's a general sort of rule when it comes to how long the markets go up and then how long it takes them. It's generally sort of 7 to 10 year rule. But anyway, we'll get into it a little bit later. Okay, so with the webinar, the go-to platform that we're using for the webinar, you can find the handout file to download. You should be able to see it on the platform there. And also, if you have any questions, then just type them into the chat, and we will respond as quickly as possible. Okay, so before I go any further, I just want to sort of throw a sort of disclaimer out there regarding the risks associated with Forex trading. Obviously, I'm not going to read through this entire slide because it'll waste a lot of time. But at the core of what we're trying to, the message we're getting across here, and what any Forex company is getting across with their risk disclaimers, is that you shouldn't be investing in the Forex market if you can't afford to, essentially. So don't invest money you can't afford to risk on the markets. That's essentially the rule. Okay, so let's get into it. Forex basics. What is Forex, or commonly called FX? Okay, foreign exchange. So it's a global market, which which means sort of anybody can trade in Forex and make a good return from it as well. All right, essentially it just allows the exchange of one currency for another, and you have to take advantage of, let's say, one currency falling and another currency gaining, and this is how you make money. You buy one and sell the other, and this is how you're going to make money on trading Forex. Okay, so anyone can do it. You do obviously need to know a little bit about the Forex industry before you start trading. You can't just do it blindly, which is one of the main reasons why I do what I do. This is why we're doing this webinar. So, pay attention to what I'm saying, please. And if you do have any questions any time throughout the webinar, please post them on the chat in the go-to webinar form we're using. So, it is the largest financial market in the world. $5 trillion a day are being traded on the forex market every single day. Okay, so $5 trillion of trading volume. That basically means exchanges, the liquidity of the financial of the forex market. The liquidity is it's a $5 trillion a day industry. Okay, so this is what I mean by it being a global market. Okay, it's open 24 hours a day, 5 days a week, and um, this is great for international um, investors, people who live in America are asleep while I'm executing my first trade. So, and so on and so forth, so it just means that it's open all the time and you can always get in and make money as long as it's between Monday and Friday. So essentially what happens is, on a Sunday night, let's say, when the market is just opening, we'll start off in Sydney, then Tokyo will open. These are the stock exchanges I'm referring to. So the Sydney Stock Exchange, Tokyo, the Nikkei, the Tokyo Stock Exchange. Then Europe will start opening up. So London first, then Frankfurt in Germany follows very shortly afterwards. They open at the same time, but sometimes Germany open about sort of 30 minutes later generally. And then obviously New York, the New York Stock Exchanges open up. Okay, so this is what I mean by it being a global market. Okay, just a very simple analogy to explain what forex is. Think about going on holiday, okay? And let's say you're leaving from London, you're going to New York, all right? And you have £100 in your pocket, and you know that you're going to need some cash when you get off the plane in New York. All right. So you go to the Bureau de Change and you give them £100. They give you roughly, with the current exchange rate, they're going to give you about $120. So you then leave the Bureau de Change, you have $120 in your pocket. For whatever reason, your holiday gets cancelled. You can't get on that plane. You have to go back to the Bureau de Change and buy your pounds back with the dollars that you just bought. Okay, so one transaction has already been made. Okay, so you've bought dollars with pounds. Now a second transaction has to take place. You have to get your pounds back, but you have $120 in your pocket. Are you going to get exactly £100 back? No, you're not. Okay, and I'm sure you've all been in this sort of similar situation. You're going to get roughly, let's say, for example, around 95, £98 back. Now that's what we call spread. Okay, now that is how forex companies make their money. Okay, if they're a good forex company, that is all they're making their money from, is the spread, not commissions, not hidden fees, not hidden charges. That's how they make their money, and that's fair. That's the way that it works. Okay, that's the way the industry works. All right, so that's a very basic analogy, and the most basic way I can explain what forex is and how it works and how the industry makes money. So then let's talk about pips. Okay, it's a word you're going to hear a hell of a lot of. Okay, what is a pip? Okay, it is essentially the measurement of an exchange rate to the fourth decimal place. It's an abbreviation. It's a percentage in point or price interest point. As I've just mentioned, it is the measurement of the fourth decimal place. All right. So this is what forex traders are looking to make. They're looking to make pips. Okay. So with dollar currencies, so for instance, here we have euro against the US dollar, euro being the base currency and the dollar being the counter currency or the second currency. And let's take this example, for instance, we've got 1.1051 or 1051. Okay. Generally, forex traders won't mention the one. They'll just say sort of the rate right now is 1051. They generally only refer to these four decimal places because you're not going to find a much bigger move. If you're making 10, 20, 30, 40 to 100, 200 pips a day, you're going to be very happy. Okay. Now, it is confused with tick size or tick value sometimes. They're two different things, all right? Basically, a tick, let's say, or a point, okay? So let's say on any asset, for instance, okay, it has a specific tick value or tick size, which it is the smallest movement it can make. It could be a lot smaller or a lot bigger than what the pip is worth. Okay, so just be aware of it, and um, just be very careful when entering into a trade that you are fully aware of the difference and what the value of a tick is and what the value of the pip is in relation to what leverage you're using and so on and so forth, because it could be the end of you very, very quickly. Okay. So, what sort of assets can we trade in Forex? Currencies, obviously, euro, dollar, pounds, yen, yuan. Commodities, gold, oil, silver. These are hard commodities. You also get soft commodities like wheat, corn, sugar, for instance. Indices, these are generally the stock markets. Okay, so the DAX in Germany, the FTSE in London, the NASDAQ, which is the tech stock index in New York. Dow Jones Industrials. So, as very self-explanatory there, it is the top 30 industrial companies in the US. And obviously, then we have the biggest stock exchange in the world, the S&P 500, 500 biggest companies in the world. Generally, all sorts of stocks are in these indices. And then stocks, individual stocks you can trade on. So you can buy Apple, Amazon, Netflix, Google, Facebook, Microsoft, whatever is available at your particular asset. And then we have cryptocurrencies, very interesting. Sort of times, with Bitcoin having hit sort of 20,000 back in 2017, then it went down to 5. Now it's sort of a few couple of months ago back up at 15, and now again we're back below 10. It's a very, very volatile market. Cryptocurrencies, very, very fast moving assets. Okay, so do be careful when trading cryptocurrencies that you're not using too much leverage and you're just being more careful than with other assets. Okay. So supply and demand, the very basics of economics. All right, somebody wants something, somebody has something. They name a price based on the amount that they have. We can. I'm going to use an example of oil in a minute, just to sort of explain that a little bit more. So what goes up must come down. Now, inevitably, after a certain amount of time, let's say a bullish trend on a stock market, it's going to go up and up and up. But of course, at some point, it has to start coming down. And in the Forex market or stock trading or whatever, nothing goes up in a straight line. So you're generally zigzagging. So this is based on supply and demand. Okay. What goes down must come up too. So basically, just the reverse of everything I've just said. So if you're in a long-term downward trend, eventually that asset, unless it's going completely out of business, like a specific company, unless they're going absolutely bankrupt, which is rare, if they're listed on a stock exchange, but it does happen. Eventually, once it reaches a certain level of that downtrend, it will reverse and come back up. This is all based on supply and demand, resistance and support levels, which we'll go into. Okay. So just to explain how supply and demand works very quickly. Let's say oil inventories, which are released generally every week. Um, when when there's less oil out there, it's more expensive. When there's more oil being pulled out of the ground, let's say, for instance, in the Permian Basin right now in Texas, there's a lot of oil from fracking and all of that being brought out of the ground. So the price of oil, as you may have noticed, you may have seen on the news, a couple of years ago, it went from $100, and now we're floating around sort of $50 to $60 a barrel. I think fracking might have something to do with that. Very important these days, since the previous recession in 2007, 08. Quantitative easing was introduced by the central banks. Now, what the central banks decided to do, how are we going to get stimulate the markets? How are we going to boost the markets again? They came up with QE, or quantitative easing. Now, all that is, in very simple terms, is money printing. It's just printing money and loaning it out to large corporations, and essentially what they then should be doing is loaning it out to small businesses and individuals so that they can maybe start small businesses. But that's not happening, but that's a whole other issue in itself. But that's what QE is. And let's say tomorrow the Federal Reserve decide to stimulate the economy with printing, let's say $100 billion, then you're going to see a big rally on the markets, and you're going to see the dollar come down, because on the rules of supply and demand. If there's more dollars out there, the value of the dollar will go down. Okay, so moving on, leverage. You're going to hear a lot about this. Leverage is a feature offered by Forex brokers essentially to incentivize traders to trade larger amounts of money, to trade more volumes. It is a double-edged sword. It increases the risk, that you're holding on your account. Okay, but think of it like a loan that doesn't need to be paid back. In a sense, that's what it is. Okay, that's the incentive. So if you put in $1,000, they give you a 1-to-100 leverage. You've got $100,000 to trade with on the markets. It increases your trading power. It increases the value of every pip on each trade. What it also does. Now, let me just step back a little bit. When I say it increases the value of every pip on each trade, that can work for you in a very good way, but it can also work against you in a very big way. It just means that every pip an asset moves up, you're going to get, let's say, 100 times. If you have 100 1-to-100 leverage, you're going to get 100 times the value of what you would be able to do if you didn't have that leverage. But of course, if it's going down and moving against you, you're going to lose much faster as well. So do be careful when using leverage. It gives you more margin to play around with as well. Okay, so stop outs and running out of equity and margin is much less likely. All right. So just I'm just going to reiterate, use the correct sort of risk management when using high leverages, as it also increases the risk. So I see we have a question in the chat. A couple of questions. I'm just going to have a quick look at the questions and just deal with that. Okay, so all right, so okay, the question is, in trading, if I win, does somebody else lose? Am I playing against the house or other people? It's a very good question. Okay, now essentially, yes, it is a zero-sum game. If somebody is winning, somebody is losing. Okay, but there's always it's more, think of it more like you're not taking money from another person. Think of it like if you're winning in Forex, you're taking money from the bank. Okay, the bank is losing, or the liquidity provider that's providing liquidity to the Forex brokerage. Now, if they're straight through processing, your trades are going straight out to the markets. Okay, so straight through to the tier 1 level banks, the biggest banks in the world. That's who you're trading against in Forex. Okay, so if you can just bear with me a second, I'm just going to look at okay, well, I hope that answers your question. All right, that was Sebastian and Cabello Ramolefa, I think. So anyway, I'm just going to move on, and we're going to move into the MetaTrader 4 basics. So basically, now what I'd like to do is just get MetaTrader 4 opened. So I'm going to throw MetaTrader 4 up. Now, again, use the links that I've provided you in the chat to register for your own demo account. And please, if you do have any more questions, just write them in the chat. Okay? All right. So thank you. Now, again, use that link that we've provided you in the chat so that you can go through, register your details with Forex Cube, download your own demo account, so that you'll be able to see MetaTrader 4, which is what we're going to go into right now. Okay, so this is what you will look at. This is what you will see. You'll be able to select an amount of money in your demo account, whether it be 10,000, 50,000, 100,000, whatever is more realistic for you. I would advise that that's what that's the amount that you should have in your demo account if you're thinking about investing in Forex. Okay, so essentially, this is what you'll be faced with when opening an MT4 or MetaTrader 4 demo account. All right, so you're going to see, obviously, you've got some menu options here, but I want to focus on these symbols here because essentially there are many ways to do the same thing in MetaTrader 4 in MT4. What we have here is four charts. One is gold, XAU, USD. All right, Euro, US dollar, the most traded currency pair in the world. New Zealand dollar or the Kiwi dollar, and dollar yen. So dollar against the Japanese yen. All right. So you can look at and study these charts in different time frames. Okay, so this is what we have here. Very high frequency traders tend to use a 1 minute chart, and they look at the ticks. You see, like the gold has just moved down a tick there from 20 cents. Okay, so much high frequency short-term traders, higher risk traders use smaller time frames, and the higher the time frame that you go up, you'll find generally the longer term trader uses. Okay, so we're going up the time scales here: 1 hour, 4 hour, 1 day, 1 week, 1 month. Now, a very long-term investor is more likely to use a monthly chart than he is a 1 minute chart. That's guaranteed. Okay, because they want to see the price action, and this is where we come into technical analysis. This is how you use technical analysis. You're looking at historical prices, and then you're looking at where the price is now, and then you're weighing up the odds using certain indicators like relative strength index or moving averages or volume indicators in order to give you a good idea on if you should start buying now, because gold has come up a heck of a lot in just the past sort of 6 months, because of low interest rates, because of trade tensions with the trade war, so on and so forth. So gold traders have done very well, but it's up at 1532 right now. So is it a good time to hold? Is it a good time to buy right now? Who knows? Who's to say? I mean, if I studied it and analyzed it for a good time, I'd probably say it's good for a short. It's good for a sell. Now I've gone back down to 15-minute time frame, and you can see as the markets have reached, they're dipping, gold was going up. Now we're seeing the opposite thing. There's a correlation. The markets are sort of going back up, and gold looks like it's about to start coming back down. So it could be a very good sell. That goes for the same with euro dollar. Okay, so that basically covers time frames and how and why individuals use them. And what type of traders use different types of time frames. All right, so we're going to have a quick look at the tools here available on MT4. You've got sort of like a grid cursor here, and then we have horizontal lines, which are very good for setting up your let's say a price that you're concentrating on. Let's say that you want to buy gold at 1526. You would do that, or in order, let's say, to set up a channel. Okay, you can see that there's a kind of channel here. All right, at least it's forming. So from 1550, it's a very strong psychological level on gold as well. Hits 1525, tries to get back up to 1550 with a couple of stumbles along the way, but it did do it. It's back up at 1550, and again it's coming back down just as it did here before. That's support. This is a support level, and this is a resistance level. You can see it's a successful way of analyzing the markets, but of course you have to take into consideration the fundamentals that are going on around the world: trade war, and Trump tweets, and so on and so forth. All that sort of thing affects prices or asset prices. Okay, so let's have a quick look at Market Watch. This is where you're going to find all of your listed assets. Okay, these are the sort of assets that you can choose from, and it's good to have a diversified portfolio. It's good to have sort of exposure on many different assets in order to not put all of your eggs in one basket. Okay, we've also got our navigator, which is where you're going to find your different accounts and whatnot, and you're going to find indicators as well. All right, so you've got everything here. Bollinger Bands, you can just drag and drop. You can set the parameters very simply. Now you have Bollinger Bands on gold. Bollinger Bands we can go into in another webinar, or of course you can get in touch with me through the swaphunter.com website or through the handout that we've given out in the chat, and you can get in touch with me with all my contact details there in the handout. So moving on, Navigator, this, like I said, I mean, this is essentially where you're going to find all the different accounts and different indicators. All right. Most importantly, probably, would be the terminal. All right. So with our terminal, this is terminal. Okay, this window here, you see where it says terminal here. You can see trades, your exposure, account history, certain news, and all sorts of other things in terminal. It's a very important window in MT4. Okay, and this is how you place a trade. So I'm going to click on the chart gold here. I'm going to use the new order button in order to place just a random trade, let's say. Now, the minimum trade size you can put is 1 micro lot, 0.01 lots. Okay, let's go. Let's live a little. Let's place a lot on gold while we're doing the seminar. Obviously, this is just a demo account, so there's no real money at risk here. So I'm not being too cautious. All right, but I'm going to sell gold. All right, there you go. There's your order number. 1 lot XAU USD at 1533 successful. Okay, and now you can see the trade here. All right, there's your trade order number, the time it was executed, which direction, so on and so forth. Okay, the price you got it at, the current price of gold, and this is where we're going. We're already $6 up on this trade. Okay, within a couple of seconds, but it's a big trade. 1 lot is a very big trade, and it will move, rapidly. Considering that. Europe is just closed. New York opened a couple of hours ago. So now we're getting into, things start quietening down in a couple of hours or so, but there's still volatility out there. There's still liquidity out there. Okay, so just to explain these things here. Okay, so what's balance, what's equity, what's margin? Okay. Balance shows the amount of deposited money in your trading account. Okay, and you won't see a difference in this figure here until you've opened or closed the trade. So I'm going to close this trade and we'll see. Okay, as I said, it's a brand new demo account, so you've got to accept some terms and conditions and whatnot. Just click OK there, and we'll close this trade with a $20 loss. All right. So now you see the balance has been affected. It's been affected, but let's open a trade again. Okay, so we're selling again, another gold trade sell. All right. Okay, so equity, balance and equity show the same values as long as an orders. Essentially, equity is balance plus the profit and loss you have here. Okay, so we have 49,978 minus the floating P&L will give you the equity. Now, generally, equity is the most important number and figure you should be focusing on. Never mind what's in the balance. You could have $1 million in the balance, but be minus 999,000, and you could only have $1,000 of equity. So don't focus too much on the balance. Okay, now margin is the amount of money that is used to open a position or trade, and it is calculated based on the leverage. Okay, there's a formula to explain it in a bit more detail, which will again be in the handout we're giving out in the GoToWebinar. So margin level is very important as well. You need to keep a good close eye on margin level. Margin level is the ratio of equity to margin. All right, so essentially it's the what will happen is a margin call. Okay, so if your margin level drops down to, generally most brokers use 100%. If it drops down or reaches 100%, you can still close your positions, your open positions, but you can't take any new positions. You've run out of margin. Okay, so you either need to start closing some of the losing trades or winning trades to release more margin in order for you to recover. Now, generally, your broker will give you a call if you reach this level, and he'll say, listen, you need to put in more money or you need to close some trades. Otherwise, you're going to get stopped out. Now, stop out level. So let's say, for example, when the stop out level is set at, let's say, 50% by a broker, so the margin level hits 50%, they will automatically start closing the biggest losing positions. Okay, they will be the first trades that go. So you'll find your account very quickly depleting if you're reaching a stop out level. Okay, the reason why this limit is set up is that the brokerage can't allow you to lose more money than you've deposited. Okay, so it's kind of like a negative balance protection. So this is another thing that Forex Cube are offering. Some brokers don't offer it, so be aware of that. Once again, you've got the registration link for Forex Cube there, and I want to go into trade orders. Okay, so what I'm going to do is I'm going to right click on the gold chart here. Okay, and I could put a sell limit. All right, wherever I clicked right. Okay, if I'm clicking, this is the current price here. If I'm right clicking above, it'll say sell limit. So let's put a sell limit. If the price goes back up to 1543, well, let's put it where it should be, technically 1550. All right, so if it goes back up to 1550, automatically MT4 will execute a sell trade, in anticipation that we're correct with this resistance level and it's not going to break through 1550. Of course it could, but it looks like a pretty solid psychological resistance level at this moment in time. So that's one way of doing it. You can also have a buy limit. If you're right clicking underneath the current price, you see now it says buy limit. So let's put it where it should be. Let's put it at 1525 roughly. So if the price hits there, automatically, once again, trade will be executed and you'll start buying gold at 1525. Okay, so we have also what we call one-click trading. So this is a much sort of quicker way of executing trades, sell, buy. You can see simply, let's go for another sell. Why not? If I just click on sell, you can see another trade has been set up, and our buy limits and sell limits are here. They haven't been executed yet. Nothing's happening, and you can see the prices that you've got them set at here. All right. So one-click trading is it's just a much easier way of executing a trade. It's much quicker as well. Now, a little bit more advanced way of setting up trades, okay, or orders, I should say. These are trade orders. They're not instant execution or market execution. If you go into right-click on the chart that you're on the asset that you're trading, you can have what we call a sell stop. Okay, or you can do another buy limit like you can here, but let's say that you think, okay, maybe gold will break through 1525, and if it does that, I want to be hedged. So if it breaks down to 1500, at least you have some protection here with this trade. Okay, or what I'm doing right now is selling gold. Okay, but if I'm wrong, I would want a buy order up here. If it breaks through 1550, I want a buy order up here just to hedge myself. And in order to be fully hedged, I'd need to put 2 buy stops there. So I've got 2 lots waiting here to be executed. I've got a sell limit here, which would give me 3 sell trades. So to be fully 100% hedged, I'd need another buy stop. Okay, so that's essentially when you hear buy order, sell order, buy limit, sell limit, that's how you do it in MT4. All right, now very, very complicated, very advanced way of doing things, which I won't go into in too much detail because I know you're all beginners. This is called depth of market. So you can essentially see where many sort of global traders are going in and putting their orders at. Okay, and you can do the same. You can just simply click buy stop here at 1531 or sell limit at 1531. So that will execute those orders using depth of market. Okay, but we'll leave that alone for now because this is for beginners, not for people who will be using one sort of depth of market. Okay, so commonly used strategies we've touched upon here. Okay, so we have technical analysis, which the most sort of basic form of technical analysis is the supply and demand, or support and resistance levels. Okay, so like I've already explained, we've got a channel forming here: 1550, 1525, 1550, 1525, most probably. Now you can see I'm $350, $360 in profit. I'm going to take that. When I see a profit, I like to take it. I don't like to muck around or stay in a trade for too long unless I'm using another strategy. Now, just for the case and just for the purpose of this seminar, let's open another sell trade. Okay, or why not hedge? Okay, so we've got a buy order and a sell order now. Okay, this is called hedging. Now, it's a good way to protect yourself. It's a technique that some traders use. What they will do is they will let the hedge, let's say the sell trade, come into a profit. When they think it's going to start going back up, let's say at 1525, they'll take the money on the sell order and let the losing buy trade then recover. Now, at Swap Hunter, we do have a very specific way of hedging the markets, which I would love to go into. We did a previous webinar about Swap Hunter and what we do at Swap Hunter using carries and swaps, and but it's much too complicated for beginners. But we do offer a managed account solution as well. So do look out, and if you have any questions, put it in the chat, and we'll deal with that. So let's have a look at some indicators. And you'll find them here mainly. All right, so we can go, let's say, with our Bollinger Bands again, or why not go with let's put a channel in. Let's have a look at euro dollar. Let's open this up a bit. We'll go into 1 hour. Let's expand it. Okay, so we see that we have generally we've got a trend forming here. We're in a downward trend. Okay, so we would set this up in such a way that you can see where the price tends to bounce off. So it's in a downward trend generally, but you can set up trend lines in order to give you a sort of indication on where, if where to buy and where to sell. Okay, these are the same as support and resistance levels, but they're moving. Okay, they're moving in a trend. So you've got a support level here, another support level there, and what we should probably see is gold maybe hitting, euro dollar hitting sort of 110, or getting closer to 110. And again, of course, we can, this is a very basic demonstration of how to use trend lines, but this is how they're used. Okay, so we can see that the euro dollar is caught in a downtrend and has been for quite a while, a very, very long while, actually. If we go back up into let's say a weekly chart, you'll see that yes, it is extremely bearish. Now, when I say bearish, it's extremely negative. There's a lot of sellers, and again, you can see how this works with the trend line. You can see that the price is bouncing off this moving support line a lot, but more importantly, it's sort of bouncing down. There are bigger moves to the downside from the trend line. Okay, and so that's a trend, sort of trend sort of levels, and how you set up trend channels. Okay, we can also have a very, very quick look at what I'm going to do here. Just close this down. I'm going to expand gold, go into a day chart, and we're going to just have a very, very quick look at Fibonacci's. Okay, now it's a little bit, so I'm not going to spend too much time on Fibos because it is a little bit complicated. Okay, it's essentially based on Fibonacci, the famous mathematician's sequence. Okay, and you can see how it works pretty well here in this case. You can see that this line here, the 50% level on the Fibos here, is working as a sort of support level, which it was working as a resistance level in the first place, and then it got caught in this channel. So again, support and resistance here, but it broke through. Again, support and resistance. It broke way up to 1550, and here we are at the highest level gold has been at for over 5 years now. So it's at a very, very, very high level. What I think, you know, really, I mean, we can go into moving averages, and exponential moving averages, simple moving averages, and other ways of analyzing the markets using technical analysis. Okay, so what I'm doing here is I'm going to the indicator um, menu. I'm going for a moving average. I'm putting the period as 14-day moving average. Industry standards, you got 14-day, 10, 20, 50, 100, so on and so forth, even 200. And they all sort of work together. You can see this moving average is very much moving in sync with the middle line of the Bollinger Bands, generally giving you this is where the price has to move back to eventually. Okay, it goes above it, it rides above it, but then it will break, it'll reach it, meet it again, go below it, then it'll break above it, it'll meet it again, go below it. And you can see these patterns. Okay, you can see these patterns forming again here. Now we're coming into a slightly downtrend, so this is the central point. It's the average price of the asset without all the spikes. It's just evened out. So I think, you know, to be honest, I would like to go into really quickly just you know, sort of more volume based indicators like relative strength index. It's a very commonly used indicator. Now it's also very simple to use. You can see that it has a basically relative strength index works like this. Okay, if it's at 70, it's overbought and you're going to see a correction to the downside. Okay, and if it's at 30, it's oversold and you're going to see a correction to the upside. Now it's not guaranteed, it's just an indication. Okay, so you can see here quite clearly, let me get my grid tool. You can see when it reached 70 here, actually a little bit above 76, we saw it come down again. But we're in an uptrend. Okay, so we're bouncing off of 70 constantly. Now it even got as high here in this case as 86. It can go up to 100, of course, and 0 and 100, but generally the rule is 70 is overbought, so you should look at selling, and 30 is oversold and you should look at buying. And you can use it across different time frames in order to suit the way that you want to be trading. Okay, so if you want to be trading much quicker and shorter time frames, then use a 15-minute chart and perhaps adjust the parameters of your relative strength index. So very quickly, I want to go back into the slides and discuss sort of the general market condition. Okay. Now, okay. Well, look, I think we've kind of run out of time. Oh, so we do. We have some questions actually. Okay, so what books would you recommend to get started with? Would you say trading is more about one's personality as opposed to trading strategy? Look, what I would suggest for all of you beginners is to use companies like SwapHunter.com. Books are great. There's a lot of information out there and tutorials out there on the internet for you to take to learn as much as you like. You know, and put in as much work as you want. But I mean, I've been trading for over 10 years now, and it's taken a long time to get to where I'm at now, where I'm not making silly mistakes and I'm consistently generating profits. Now, what I would love to sort of recommend one book in particular, but I've never used. I generally sort of you know, I like mentorship. I like one-on-one training, and that's generally the sort of service that I provide along with Forex Cube. So if you were to register, you know, and get a demo account opened, get a live account opened, you would have someone like myself to be able to talk to every single day in order to coach you, teach you, and show you the way. Now I'm going to put a link on the chat here to swaphunter.com, where you can register your details. And I would also recommend using our YouTube channel to keep up to date with all the videos that we're producing, that relate to different techniques, different strategies, what's going on in the markets at the moment, how to, how we're trading, how I'm looking, how myself and my team are looking at the markets, where we think the market is moving. So to answer the question, the best way to move forwards and to learn is to get in touch with people who know more than yourself and communicate with them and interact with them. Okay. So basically, I'm just going to okay, can a team of individuals create an account as a fund? Now, that's a good question, Alex. Alex, basically, there are solutions like PAMs. Okay, so we have what's called a PAM account that we run, and we also run with Forex Cube. So yeah, a team of individuals can pool their money together. In a number of ways. So either using a PAM solution where you've each got individual accounts, let's say $1,000, there's 10 of you, you each have $1,000, you all keep your own money, in your own name, but it goes into a pool or a fund, and whatever, let's say one guy puts $10,000 into the PAM, another guy puts $1,000 into the PAM. Obviously, when you make a profit, let's say $1,000, the guy who put $10,000 is going to get 10 times as much profit as you are. So, you can most certainly send me an email or get in touch with me, and I can deal with that, that sort of, we can go into more detail about funds and PAMs and MAMs and things like that. If you do have a group of individuals that are interested in getting a PAM or a fund together, then do get in touch. Okay. So basically, I'm just going to sort of round things up with I wanted to discuss current market conditions, all right, and what traders are looking out for at the moment. It's very important to look out for, let's get into it, Trump tweets, okay? So for example here, what we're looking at is the Dow Jones, all right, Dow Jones Industrial Average. Now we can see with my laser pen here, we're looking basically here on the 23rd, so it was last Friday. What happened was the Jackson Hole Symposium, where all the major global economists get together and they discuss how to deal with what's going on in the markets. Obviously, we have a global economic slowdown. We have low interest rates globally. So this is what they were doing. Now, the Fed chairman, Jay Powell, made a speech, okay, and the speech went pretty well. Okay, the market dipped a little bit, but what he was saying is that we're willing to remain more accommodative. We're thinking we could cut interest rates again, but we're not going to right now. And what happened then was, the market liked it. There was a little rally. Okay, there was a small rally here. We're talking about okay, so 26,000 up to 26,000. It's about 200-point rally. I mean, it's or not quite that much. I mean, it was like 26,000. It's like 100 and 150 points. Then Donald Trump gets involved, and he doesn't like what he's hearing, and essentially throws a tweet, a barrage of tweets, and what then happened was, after after Jerome Powell made his speech, then you can see here we've quite clearly sort of labeled it out for you. This is the sort of vitriol, poisonous rubbish that comes out of Donald Trump's mouth. When he is not an economist, he knows nothing about the stock markets. He has, on his CV, 4 failed casinos that went bankrupt, and he seems to think that he knows better than everybody else still. So he decided to say, Fed's not doing enough. blah 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 blah. You're not cutting rates fast enough. We need lower interest rates. We need more quantitative easing. We need more free cheap money sloshing around in the markets. And you can see the effect it had on the markets, on the Dow Jones. An absolute bloodbath from one tweet. So do be aware of to be aware of the environment that traders are in these days. Donald Trump tweets have more of an effect than the most important economist in the world. So do look out for these tweets. They're very they can really shake you off your game. Okay. So low interest rates and inverted yield curves hasn't happened since the last recession, and it did just happen a couple of weeks ago. It's happened 2 or 3 times in the past couple of weeks, where 10-year Treasury bonds and the return will from let's say you buy or put $100,000 into 10-year treasuries, you're going to get roughly around sort of 1.5% return on that investment after 10 years. Now, generally what happens is you're looking at higher returns on shorter term bonds. So a 2-year bond, you would be looking at say 2 or 2.5%. What's happened now is that the 2-year bond, the yield and the return you're getting has actually they've crossed over. They're at the same level, okay, or in fact it's going lower. Now, bonds are just a way of people preserving their equity. It's just a very safe way of not losing money, on and making a very small return if you're lucky, because these days with low interest rates and the inverted yield curve, you're going to be extremely lucky if you make more than, I mean, in Europe right now we're at 0. We're probably going to go into negative interest rates. So very high level, high net worth individuals, billionaires, millionaires, will buy bonds even at a negative interest rate. So they're paying a premium. Okay, let's say 0.25%. They buy $1 million, and they're going to lose 0.25% after, let's say, a 2-year or a 10-year period has passed. This is just in order to preserve their equity. Okay, so this is how scary things are right now with low interest rates, and that goes for the same goes for having your money in the bank. What are you gonna make from having your money in the bank? Nothing. You're probably going to get charged, in fact. Okay, so moving on. Obviously, the China trade war is not, it's not news to anybody. We all know about it on any news channel. Okay, so it's on the news every day. All right. And it is causing a lot of volatility and problems, and the tariffs keep going up, and on the amount of goods it keeps going up, and then China keep retaliating in the same way. Hopefully there has been some positive news and chit chat on Twitter and on on investing.com's news articles recently. Actually, there was a bit of a rally today on the markets because there was a bit of good news coming out that America are now willing to talk with China, and they're going to look into some kind of solution. Okay, but currently up to 25% on 500, $500 billion worth of goods. Okay, and we're coming to the end of the economic cycle. Every 7 to 10 years, generally there is a recession. Just go ahead and look it up for yourself. And how do you protect yourself against recession? You get into specific assets, you get into certain types of assets, and you use different strategies. The next recession will be probably because there is a slowdown in growth in manufacturing and whatnot. Okay, the greatest thing about Forex is that you can make money on the way up and you can make money on the way down. Okay, so you can make money selling dollars, buying dollars, whatever. Okay, that is the greatest thing about Forex, and we have at Swap Hunter some very interesting strategies we'd love to share with you that are on our website, that are on our YouTube channel. You have the links for. We also work very closely with Forex Cube. They also have great support and everything as well, but using us in tandem with them, you stand a very good chance at navigating your way through the markets and through the Forex market successfully. Okay. Any questions at the moment? Just stick it in the chat if you do have any. All right, and I'm going to just sort of go over some of the major benefits of having an account at Forex Cube. Okay, so lightning fast execution on your trades, no slippage or anything like that. So if you like high frequency trading, or if that's the sort of thing that you're looking for, Forex Cube can most certainly accommodate you. Ultra tight spreads. True STP ECM broker, that means they don't have a dealing desk. They're not trading against you or hedging themselves against you. Your market goes straight through to the open global financial markets. Okay, safety of funds, you're insured up to $20,000. You can have a look on their website regarding all of that. Instant deposits and withdrawals, not many brokers can say that, so it is a massive benefit. And they do have some automated trading solutions as well. And the link to register a Forex Cube account, we've put in the chat. It is in the handout. So, get yourself registered, get yourself a demo account, open a live account, however you're feeling, if you're feeling a little bit more confident after this webinar. And obviously, you can learn more about us, myself and my team at swaphunter.com, our strategies, our tools, the indicator, the Swap Hunter indicator, how it works and how it can protect you, preserve your capital, generate capital. And, there are a few different ways of using that, which we can go into. Okay, we've got a question here I just want to address. Do you think a no-deal Brexit can be beneficial in terms of trading? Yes, it can be in very, very simple terms, as long as you're on the right side of the trade. It's going to be a difficult one to call, whether to buy the pound, sell the pound, what's going to happen to the FTSE, the London Stock Exchange. It's a very tough, it's a very tough trade, and it's cost a lot of people a lot of money, but has made a lot of people a lot of money. We could do another webinar regarding Brexit the closer that we get to October 31st, which is the official day. But no deal Brexit is most certainly looking like the most sort of common the common sort of outcome here. So, of course, once again, we can go into more detail about Brexit in person. Okay, so Cabello, you've just asked what is the link between Swap Hunter and Forex Cube? It's a very good question, fair question. The link between us is we're partners. Okay, Swap Hunter Act, we're a company on ourselves that essentially software licensing, trading, referrals, introducing broker sort of company. All right, and Forex Cube are a fantastic brokerage that we've selected and partnered up with, and we direct clients and we work with Forex Cube to to increase awareness of what they're doing, what Forex Cube are doing, and the environment they provide our clients is sort of second to none. And basically, we can offer many benefits if you were to come through. Let's say come through Swap Hunter and then register with Forex Cube. You're going to get additional support. You're going to get support from Forex Cube, and you're also going to get additional support from Swap Hunter and the team here. So that's the relationship between the two of us. I hope that answers your question, Cabello. Yasantha, a question from you. Oh, you're just saying thanks. This is great. Okay, thank you very much, Yasantha. Thank you for taking part. Thank you, everybody, for your attention and taking part in the webinar this evening. I've enjoyed myself very much.